Okay, quick look through Tuesday's end of day closing screens. So, drift down today. Nothing too dramatic, was it? I just want to buzz through a few. I'm gonna do a little bit of focus on the US as well tonight. There's not much in the UK screens. I've shared this one out public, and as always, when the market is pulling into correction levels, these are the most interesting times if you're a bull. You get to see all the strongest stocks, and obviously you will see some of the gold stocks and that what are doing okay at the moment. But what we're looking for is we're looking for the next true market leaders. We're looking for the obvious leaders, and I just want to, just before I jump into my screens and before I look at the markets, I just want to just highlight what I'm trying to talk about here. Let me find the right page. So as I go through these screens, I'm looking for, in fact, I'll zoom this out a bit more for you. I want to see stocks. We had a base on PLTR down here as well. I want to see stocks what are basing out, and in the area of interest, the breakout area or the first pullback area. And this one gapped up, went through the base, and then it threw a first pullback. It took the scenic route. Now, we quickly talk about time frames, don't we, here now? We go, well, the swing low held all the way through this. It was what I call the scenic route. But, going forward out of a market correction, we want to be looking for this setup. Now, this, the best stocks stocks what might have broken out a few weeks ago, a month ago, is pulling back into normal areas. And the earlier the trend, the better. Meaning you haven't, meaning we're not looking at this. We're not looking at this stock what went, 500%, close to 500% out of the low risk entry, and we're not, I say this now, PLTR is pulling in to a normal area. We got this big gap on earnings. It traded towards this earnings report here. See this is the prelims. It traded up towards that. It got really, it gapped up through that, and I drew the line, didn't I? I always draw this line. Next time I will even take a look at PLTR is on the next pullback, the normal retrace. Where is it? I drew it in. There it is. Where is it? It's traded. It's already traded this bar I drew in. So, that's not crystal ball stuff. That's just normal market action. That's how stocks trade. But job number one, if you're a position trader, is actually look for this one here, the early pullback. Let's just go back to Meta. You can search these things on my Twitter feed as well, because I posted this on Twitter. I don't know if it was this one I posted live, but I think it was. I'm pretty sure I posted the first pullback on this one. It might have been NFLX actually, but we're looking for the early set. This is old news, is what I'm trying to tell you, and it doesn't mean it can't keep going, because in a bull market they should keep going, shouldn't they? But not at the pace they've been going at before. In this world of AI, and as AI starts to filter through, the picks and shovels has been doing all right, and the story's been doing okay, hasn't it? But it's when you start seeing it. If you're a cancelling investor, or I've got my own sort of GTRS way of screening the markets, what is more tuned to UK, but still works the same for the US. These stocks will be screaming on the top of my list, the obvious ones. What are, if AI is helping that company, it will be filtering through into the revenue. You won't be able to hide it, As, Nvidia was just screaming at the top of our list forever and a day. as super microcomputers as well was, before it made that huge move. So that's what we're trying to do here. We're trying to pick these stocks up, before they make this huge move. And after they make this huge move, it doesn't mean you can't hold them. My target is the moon. If I'm trading something in a swing lane, my target is the swing move. But if I'm trading something as a position trade, and throw away the term investor, or I'm more of a trend follower, so I'm more of an investor than an active investor is. I buy and I hold until the trend breaks, and I want that to be forever. But in reality, most good trends, and especially in our end of the market in AIM, where the higher growth is found in the UK, you're going to get, on average, I always say 18 months, before the trend breaks. And some of them recover, many don't. So, I'm after that trending move on that time frame. I don't want to go talk about the sort of more active stuff really here. I want to talk about, we're in a correction, Nasdaq's hit correction levels. What are we going to do about it? Well, we're going to turn up every day and we're going to try and find those next leaders. We found all these, we found every market leader in the US. They went through my screens. We look, they're there. I print them out every day in my chat group. They all went through the screens multiple times. But it's about getting the beginning of the trend to get paid for the trend. It's not about turning up and saying, oh, I think Nvidia's trading at value now, because that ain't going to work. It's coming at these stocks after they've made those hundreds of percent moves. They're going to be they're going to be more efficient and more of a swing vehicle, trading the ups in the trend rather than catching a big move, is what I'm trying to say. So, as it always is, every man and his dog was talking about PLTR at the end of the trend, near the end of the trend, and here, radio silence down here. So, the lesson here is your eyes will tell you what you need, what you need to know. If you're reading about it, especially if you're reading in someone's, in an article, in a blog or whatever, about a stock, there's got to be something going on in the background there. Why they want you to read about this? You read, people write articles about stocks. What are going to get the most hits? Put it that way. These when this, go back and do a news search for this time period, and see how busy this one was. It's always quiet when they're setting up, is what I'm trying to say. So you've got to trust your own eyes a little bit more. Look for the best merch out there, what's pulling into the low risk entries, breakouts, every stock will break out. Pullbacks, every stock will pull back on the journey. The only stock what doesn't pull back is the stock what gets bought out and the trend ends. So we're not bothered about that. We just want to get on early before the train leaves the station, at the station as it's leaving the train station. So keep it simple. We've got a correction in the US. It's not a time to be hiding from your screens. It's a time to be turning up. And I say correction. We've got as good as 10% there, haven't we, on the Nasdaq? I'm not saying the bottom's in. I'm just saying, there will be stocks, even if the markets went lower, there will be stocks what are really sort of, will show their hand over the next few sessions and over the next weeks, But the strongest market at the moment, I think, is it? Well, it's either the S&P or the Dow Industrials. So these are the last ones to land at the moment. Obviously, the Nasdaq's already sort of landed in a correction area. The S&P sat on its 200-day or 10-month average there. The Dow sat on its 10-month. Real obvious areas where you should turn up. Real obvious. Here. Nobody was here to see the bottom go in the market back on this low. Nobody turns up. But these are the days you should turn up, and the screens what follow throughout the next week or so. These are the important ones. I tell you now, my site, this will be the lowest of the last few weeks. People turning up for this screening session. Guess what? You've got to flip that on its head and embrace the sort of pullbacks in the market. I get excited about the pullbacks in the market. The portfolio is doing fine. In a small drawdown, but it's doing fine. It's about turning up and getting excited about the next market leaders. So I'll just quickly, we'll just recap on the gold stocks have been working well for us. No need to pick a top in that. They're doing fine. TLT, it's bumped up into a level here now, and as the market goes down, TLT starts going up, interest rates come down. Go and have a look at oil as well. That's an interesting one as well, because we've been banging the table on this big level in oil for a long time. I will say, probably a year. We've been talking about this for over a year, I think. But these bounces here, we didn't see any oil stocks. No oil stocks to be seen, and that just tells us it's a technical bounce in the oil price, and it was. So, when the oil stocks start in the screens, we know it's in play. But yeah, oil falling lower would be a good thing for everyone. It's the quickest injection of money into your pocket, isn't it? So that's that. From here, I will just quickly jump into. I'm just going to juggle some screens. I'll quickly jump into. Just buzz through the markets. What? Hang on a minute. Let me. I've got a little list of stocks here, and they're virtually all green today, and I'm just going to bring this one up because this is one I'm holding. No crystal ball. It's not. The entry was a few weeks ago, and I bought it. Where did I buy it? On this day here. This day here, I bought this stock. And it's traded a swing move already, but I'm kind of winging it for a bigger move. But, when swing trading's good, I don't mind sort of holding a few more sort of higher growth, aggressive ones to try and get a bigger move out of them. But, same again, this stock was real obvious down here. And this day here, it was into news, it gapped up. Otherwise, I would have been all over that. But yeah, I took it here. I mean, I took it the day after the prelims here. So, that's what I'm trying to get across here is these stocks are holding up strong because they've got gas in the tank. If you look for the strongest stocks, the trouble with sort of holding, say, a basket of FTSE 100 stocks is they'll all swing up and down with the market, most of them. But if you concentrate on the ones what, not the stories, or I think the valuation's good, and I think, Edward Treetop's been shopping at the shop and he says it's fantastic. It's really, if you actually look at the numbers and say, this is, just order the whole FTSE 100 and say, well, these are the, it's very easy to narrow down the FTSE 100 just down to the growth stocks, the ones that have growth. I mean, they're big efficient blue chips, aren't they? But if you only did business in the ones what are trading towards some really good growth, they'd still swing up and down, but you just have a little bit more relative strength against the market. You know, they'd walk to the beat of their own drum, you know, slightly. In small caps, you know, yeah, small caps do get very thin and all over the place in a bad market. But, you know, this week we've got some of the small cap accounts just flying through the highs. Other ones are just in a drifting a bit. You know, it's actually worse last week in small caps than this week. This week's been fine, to be honest, because we've got some going up as some consolidate. But yeah, it's about, you know, the fundamentals, what will actually hold your stock up, a reason for a stock to be a leader. And, you know, I'm going to be very strict on this myself. You know, I'm not going to just be, I don't trade anything on valuation at all. You know, I trade on what's got a reason to actually trend forward. And, you know, that's never going to be valuation. It's always going to be growth based. So let's just fly through these screens. I'll just quickly see what gapped up today. Yesterday, obviously, all those defense stocks, what spiked yesterday. Worst possible day to trade, a news day on, you know, buying into stuff like that. Never chase that kind of stuff. Into the closing highs. So, you know, yesterday's action on these stocks, I'll show you where, you know, this is a normal pullback into a really obvious area, anywhere around here. But this day here, it was on volume, and, you know, it's our end of day screens on this day on a closing basis, and anywhere in this pullback area, you know, William O'Neill rule, you know, I won't tell you it. It's an obvious area above a base. William O'Neill rule. Go and read it. Rolls-Royce. Same, you know, banging the drum again, aren't I? You know, why is anyone buying it on this day here or this day? You know, it did go up. This was the gap up on the news as well. But why is anyone buying up here? Because if you're an investor or a longer term position trader, you should have been buying here, because this is where it emerged from. And, you know, how many years do you want of this stock hitting the you know, the 52-week high script before you actually, you know, how many times does it have to tap you on the shoulder before you can actually put a position in the market? So same again, you know, this is where you're going to get your good, as from an investment point of view, a longer term dollar cost out, whatever, you're going to be buying emerging stocks, aren't you? For a trend following point of view, you're going to be buying the early bases, early pullbacks and bases. From a swing point of view, you're just going to be buying pullbacks and selling the moves. This thing is the best stock in the market in the FTSE 100 of the period, isn't it? Absolute monster. I'm trying to steer people from the news end of the market to where their own eyes can just turn up and say, oh, you know, Rolls-Royce is breaking out. Trouble is, you know, the software's fantastic, you know. Believing in what the software can do for you and your own eyes, you know, that's where most investors fail, isn't it? They need someone to give them a reason to pull the trigger rather than what they can see with their own eyes. So I'm just flying through these closing highs today. And, you know, it's breakout, pull back. It's not an easy ride sometimes, but it still works, doesn't it? Prime example, one from our swing screens, you know, did all this before it went up to that new high. Got to be bullish in a correction. Sometimes corrections roll over into bear legs. Guess what? You know, that's life. It happens. You know, risk management. You know, we'll just stop seeing stocks. We'll stop seeing any opportunity in the screens if the market rolls over. But if we see opportunity in the screens, and maybe a sector just goes it alone, you know, in a bear market, as sometimes they do, but we will always see it in the screens. We call this a sermon at my group, the sermon. So I run a pullback screen, and this one just brings up every swing point in the market, and it's not a get through those investment trusts. We've only got kind of 12 stocks, I think, today. This is a return to growth. I'll just quickly have a look at it. I don't think this one's... It says it's debt free. Always double check these things. You know, this is like a launch pad for your research. So obviously the market, the primary trend of these markets is still, you know, down. The AIM share market. We've been trading against a bearish AIM market for 40 odd months now, but you know, stocks have been working. So return to growth. It's a story in turnover. I can see that the numbers going from 14 million to 18 million to 54 million. So if you read the report on that, it should be all over that for you. The numbers tell you what you've got to go and find in the RNS. Cranswick. Intertech, bit of a messy trader, that one. It is a messy watch list today. Screening list. PAF. So I've already bought this. I think I posted it as well, but I bought it on down here somewhere. I don't know what day I bought it on. I can't remember what day I bought it on, but I bought it over here somewhere. I might have bought it on this day here, actually, just as a pullback. And it's, you know, it drifted, and then it got huge volume today after a few days distribution. No crystal ball. This has been bought as a more, it's liquid enough for me to sort of be nimble on it, but it'd be nice to be able to hold it. I've got plenty of gold already though. I think we all have at my group. Yeah, that's what's in there. I'll quickly have a look what's in the end of day screens. My end of day screener should bring up anything worth having a look at. PAF, ITRK. So I'll quickly go back to ITRK. Obviously got a pullback, didn't we? And it's just gapped up on the news report. As always, I'll just punch it in, ITRK. Turnover's pretty much flat on this thing, so... And was that the prelims? Right. Yeah, forget what we've got. We'll wait for the new numbers to filter through. But turnover is expected to tick up a bit, and profit was accelerating. It's traded towards that. It will sort of tail off a bit unless it's... Obviously, that's a, you know, a good report, and what I'm telling you now, it was forecast to decelerate after these prelims drop, but that might change, you know, depending on what numbers they drop. But yeah, look for a base, look for consolidation to key off. I haven't traded this one. I think the last time I traded Intertech was all the way back here, back in sort of 2000 and 2012 probably, maybe 2010. So when I say look, it's always been a messy stock, this one. When I say look for something to key off, say we've got this breakout, first meaningful pullback. If you don't buy the breakout, is what I say. Not for me, but so I also want to just have a look down my leaderboard, and I'm going to go. I just want to have a look at some stocks. Should I look at a few large caps? I'll just go through the large caps. I'll leave the small caps out today. And I just want to go through the obvious ones, what we've been all over. Beasley gapped up today, just drifted back into highs, Hard to argue with that, isn't it? HIK is now trading towards some pretty good growth after getting this behind it. So we have this reaction to basically the prelims dropping. This stock, once it's got this out of the way, it's now looking forward again. And forward numbers look pretty good, but there's nothing to key off yet there. It's raced right up the GTRS. I'm pretty sure this thing's moved forward. I'm not sure yet. We'll give it a few more days just to make sure the new numbers have come into play. Once the prelims drop in share scope, everything jumps forward, you see. So we just have to wait for that to happen to get those or read the RNS and then just go and see if they've dropped. Obviously, it is that easy. Sage, SGE. So, yeah, extremely interesting area here. If this one holds tomorrow, this one's one to watch. Moving forward, that one's a choppy old stock. I'm just going down the large caps. IMI. Yeah, IMI it just exploded on those results. We had it on the swing screens on the result day, and it gapped down and just went up through them. Along with Weir that day as well, what was also in the swings. And I say swings because it's a large cap efficient stock. Obviously for the investors, they'll be looking at these same stocks, but with a different sort of time frame, as I do for the family portfolio. Throw them in the family portfolio and treat them like a trend. So that's IMI. What else is holding up there? I've lost where I'm up to. Wise is in there as well. It was good to us, wasn't it, over the years? It was good. I can't remember when I last traded Wise. Must have been this run here. I think I pulled. I think I actually bought. It broke out of here, didn't it? And I traded this run on Wise, and it ran out of steam, didn't it? But I did rotate it into something else, I think. So yeah, Wise is up at highs here, and it's going a little bit reverse vol today. Another one. If this throws a swing point around here, that's going to be potentially an interesting stock. I'm not sure when its results are. This is raw screening. You have to go and check. You're not stepping in front of results, obviously. They must be coming soon. So that's Wise. Go down a bit more. Halma. HLMA. Another one. I've got a position in this. I've still got a family put in the family portfolio. you know, just basically winging it for a trend on it, you know, because I don't want to be paying to nip in and out of these things on the low maintenance on the family portfolio. But yeah, you know, around here is a first pullback to all this mess here. You know, I bought it here and I added to it here, so my average price is sort of probably just the low 2,600 and change, I would say. But around here, happy days. If it moves below here, you know, it'll be a break-even trade. Halma. Wouldn't surprise me to see swing points all over this market this week. I won't curse it though. I'm just trying to. Next one down, KNM. Moving on. Then we've got Weir, another one. You know, obviously you can see the ones I'm picking for this more nimble sort of buying pullbacks in uptrends. You know, they're more liquid because I can move in and out of them. Weir. On the family portfolio, what's the investment portfolio? I bought it here and I added to it here. So average price is down here. This, you know, if it moves below this, it shouldn't move below this 2,250 and change area here. 2,250 it looks like it is. 249 whatever. Shouldn't move back below there. If it does, yeah, just be a scratch trade. Trying to get, you know, the job at hand is to get the portfolio trending. It's not to be in cash all the time. It's to get the portfolio trending. Most people, when they come to the markets and they go through a few market cycles, they're all in, you know, when the market's really doing well. And then they go to cash as soon as they start seeing the profits evaporate. And then the market goes back to highs, and then they start throwing mud at the wall, hoping some will stick again. And then the market corrects again. You've got to get out of that cycle. You know, zigging when you should be zagging and zagging when you should be zigging. You know, you've got to get off that sort of way of doing things, and you know, take the markets on your own terms. For me, I buy breakouts and I buy pullbacks. I always do it on my own terms. So I won't go too far much further down the list. I'll finish it here. Auction technology. Now, you know, this I've never traded it yet, but it's kind of a bit of a favorite of mine because I use the software a lot. I'm all over the auction sites hunting vinyl down, and this stock is loaded with gas in the tank. Now, my big problem with this is eBay's just dropped all its fees for the seller. So, but when you do business at an auction house, you know, this is the online technology. You know, the seller pays a fee to the auction, and the buyer pays a fee to the auction. And if you take part online, whether it's Easy Live or any of the other ones, basically what happens is you know, they get a % cut if you bid online. So fantastic if you like spending money on vinyl like I do. But yeah, I mean, it's bumped into 52-week highs. It's not really traded one. It's traded above 6-month highs here, and it's messy as. And you know, this big level in the market here, we've drawn it a few times and it's failed at it. It's failed at it again, really, there. But I think if you see this coil up here and make a lovely little base, and you know, that would be my sort of key to sort of look at that closer. Now, it was trading towards these prelims here, and the market just didn't take notice of it. That wasn't very clear, was it? The market, you know, I kept putting the line, I kept putting the breakout line on, and then it kept drifting off again. Looking at it again, it drifted off right back to lows, and it was trading towards these, and the market didn't. Sometimes the market just doesn't care. It's not in play yet. They just ignore it. It was trading towards good results. Now it's trading towards better results. So they bought it up on those prelims, and it's trading towards some pretty good numbers now. I've got it's got 136 down to 130 on the turnover, back up to 147. Profit before tax 7.1 to 13.7 to 51.6. So that's a huge tick up, which is basically doubling the earnings per share. If you have a look at the earnings per share going from 15.6 up to 33. So you've got 111% forward earnings per share growth, and you've got 276 in the pre-tax profit. Turnover staying pretty flat at 13. So obviously, that's what you want to do. You want to dig into the RNS and go, why is it ticking up so much on the turnover being flat? And you'll get your answers if you do your research. So yeah, look for some good action going forward on that one. I don't step in front of these things. I wait for my pitch, and my pitch will be seeing a base and a breakout. At the moment, it is a pullback. I totally see the pullback is a potential slingshot into a potential move, but I'd rather these early, zoom it out, these early sort of basing areas. We'll go back to here, the IPO breakout. You want to see a nice little accumulation and a breakout. It didn't do bad off. It went 100% off that IPO, but this is what happens in a lot of IPOs as well. They have an initial move, and then they just drift off, and you lose them for a few years, and then all of a sudden they emerge. Go and have a look at Facebook and ones like that. It's very common. Few and far between the IPOs what break out and then just click the heels and just go off on a massive run. Fever Tree's your poster child for that setup, isn't it? But yeah, they are few and far between. So yeah, let's quickly have another look at the US, see how they close this. It's a massive upside rule today. They've took the opening range lows out, and they've took the opening range highs out. So on the SPY, on the S&P, the Qs, the NASDAQ, and we've got the industrials bumping on its opening range high here. Small caps gap down, gap has closed. Look for direction after that. But we're looking at the leaders first. These three are the leaders. The small caps is obviously lower down on the risk tier, on the risk fountain. Transports, the classic leader of the markets, Dow Theorist. We've got this big basic channel-y sort of action here, and it's actually rolling over on virtually all time frames. This one is, it's got to hold this 50-month here now, and that's what you'd want it to hold. You'd want it to hold this 50-month. And once that clicks its heels, it's just not been taking part, has it? And all the boxes will be in a line, won't they, if we get the transports in the mix. For us who like a bit of Dow theory, I'll leave it there. That's 40 minutes. We got quite a bit out of that, didn't we? Anybody got anything they want to have a quick look at in chat before I move forward and go and sit in front of the couch? Okay, cheers all. As always, I should just mention my website. You know, there's a lot of free content I've been working on there, and just making it easier for sort of new members. And the public areas had a bit of a makeover just to make things a little bit easier to work your way around my site, the higgledy-piggledy site as it was. So yeah, go and check it out. Cheers all. Cheers, Mike.